Welcome back to Making Money Matter, ladies and gentlemen. I'm your host, Kerry Stevenson. Now, you all know I recently was at the New Orleans Investment Conference where I spoke to Marco Rock. He's the president and CEO of Cassiar Gold. They're listed on the TSXV as GLDC and also on the OTC, which is GLCF. They're not on the ASX, but there's easy ways for you to get access to Cassiar Gold shares. We can talk share structure. We're going to talk what they've got. I did this quick little 3-minute teaser for you all. And some of you have said, when's the deep dive? So here we are. We're back doing a deep dive because Marco is up in the north and I'm down south. Marco, great to see you again. Thanks for your time.
Nice to see you, Kerry, again. Thank you for your time.
Well, we did that short little brief one, but let's start from the basics. Talk to us about brief overview, who are Cassiar Gold, and then we'll do the deep dive.
Sounds good. So Cassiar Gold, we are a Canadian gold explorer, advanced gold explorer. We are focused on our flagship district in Western Canada, in Northern British Columbia. We have 2.3 million ounce resource, over a gram per ton at surface, in outcropping in our flagship district, 1 square kilometer footprint out of 590 square kilometer land package. We have a team that has a track record of discovering, permitting, building, operating, selling, billion-dollar gold projects, not only in Canada, but around the world. We have a project that has paved road access, grid power, water, fully unpermitted mill, mine permits, and we're trading at a valuation of a very attractive 40 million Canadian dollars.
Okay. So you just said you got a mill, paved roads, grid power, like ticking all the boxes, mine permits. How long have you had the project and how did you get your hands on it? Because it sounds like there's a lot of boxes ticked here. So how has a small Canadian listed company on the TSXV grabbed a project which sounds like it ticks a lot of boxes?
Well, we're small only in our valuation, which makes us very attractive. We've been with this project for 5-6 years. It's been the same time I've been with the company. We acquired this project from a group, or optioned and acquired it from a group in 2019. Back then there was no resource really, over the past 5 years we've done a lot of work, environmental, with the mine permits, reclamation. We've done a lot of drilling. We've drilled nearly 70,000 meters. We've grown our resource from 2 million ounces to 1.4 million ounces, now to 2.3 million ounces. We're on a path to eventually put this into production.
That was going to be my next question. Is you've had it for 5 to 6 years, done a lot of drilling. My audience always loves to know about shareholder value and the steps going forward. I'm talking to you. Cannot believe it, Marco. It's coming up to the end of 2025. So it's been a reasonably busy year. What I want to know is what's happened this year and how's that shareholder value going to be increasing going into 2026?
Yeah, well, first of all, the shareholder value right now is massive, because the valuation really does not represent what we have on the ground.
Okay.
I've already mentioned the resource. The resource, it's at, in US dollar terms, the contained metal value is around $10 billion US dollars of gold.
Nice.
And 90% of the ounces that we already have defined are within 150 meters from surface. Occupy just 1 square kilometer footprint out of 590. So we have a lot of aspects of a development company because we have 5 best producing mines, and we have all the infrastructure, etc. But we really only explored a very tiny portion of our land package. Now this year it's been a very busy year. We've advanced the project quite substantially. Early in the year we've actually added, we've released quite a bit of information, geophysics, mapping and sampling, soil grid surveys. We've increased our resource. So put out an updated MRE on the back of the drilling from the previous years, increased our resource by roughly 80%. Got back into the field, did a $6 million financing, got back into the field, completed a 7,300 meter program, which was just completed a couple of weeks ago. We haven't released any assays, and we can talk about that. That's coming, imminently, and probably going to be releasing that until probably January or February of next year. In batches, and basically following that, we're going to be releasing results from metallurgical studies, which we haven't done yet, although we have historical production from all the 5 best producing mines. And on the back of that, we're going to be announcing as well, in the first half of next year, our first PEA, preliminary economic assessment as well.
You just said a moment ago that all the work that you've done is on 1 kilometer of this property, yet you've got a massive land package there. Is that a deliberate, I guess, strategy to potentially bring something into earlier production by just focusing on a smaller area because you've got the infrastructure there?
Well, yes and no. Really, our focus is to go from the known to the unknown.
Okay.
Sometimes it's really hard to quantify the scale of a land package like this.
Yeah.
Currently our pit contained resource is just over 1 square kilometer. The main pit is just over 1 kilometer by 1 kilometer, with the deepest point being 300 meters. It's already quite substantial. If you look, for example, at the image behind me, it's just a little footprint there, like a few kilometers north of the mill that you see here.
Okay.
So it's a really large scale, and we have a pretty high confidence resource as well, in a sense that, for example, for our inferred category, we have 50-meter drill spacing, and for our indicated category, we have 25-meter drill spacing.
Yeah.
So we're taking a phased, systematic approach to growing what we have, while also allocating a substantial or a significant amount of drilling to drill test some targets. But we've over the last few years kind of drilled along a 15-kilometer trend that includes the 5 best producing mines, and we hit mineralization across those 15 kilometers. But only around the Taurus deposit we've allocated really substantial drill density that enables us to have a 43-101 compliant resource, which in Australia is equivalent to the JORC resource.
Speaking of which, there is some, I believe when I was reading some of your presentations, one comment was that there was a similarities to some of the West Australian deposits. Now, some of my audience are Aussies. Is there some sort of similarity to WA deposits? So I think there was mention of even Fosterville, which is not WA, but it's Australia.
Yeah, that's Victoria. Yeah, well, actually, there's 2 of the best geos I know, Doug Kirwin, which by the way is Australian, and David Rees, who is Canadian. Doug Kirwin 5 years ago actually compared this project to the Fosterville district, and that's really what got me into the project. So with that kind of comparison, it's just hard to not get on top of it. So he mentioned this. 5 years ago, Doug mentioned that he saw the potential for 3 to 5 million ounces, which we're realizing. And then I was already happy with that, but then he added that he saw a lot of similarities with our project in Fosterville. And I asked, well, Fosterville has that district yielded in production and discoveries nearly 90 million ounces. And I asked Doug, do we think we can have anything closer to this in this district? And Doug said, Doug is very conservative, said, there's certainly that potential. And I never saw Doug, making such a,
bold statement,
bullish statement about any project. So I said, well, this is it. I'm jumping on top of this. We had another project, David Rees, which is, by the way, our chief technical advisor. He compared this asset to the Beta Hunt mine, which,
oh yes,
Yeah, which owned by Carora. There was M&A. I think now the company has another name, but it compared to the Bethlehem mine, which has a big nickel component. So I thought that was interesting. But I mean, I'm not a geologist. For me, there's two types of rocks. Ore and waste, and we're finding a lot of stuff that is really good grade, and pretty happy so far. Comparisons aside, but yes, those are the only two projects that I saw, renowned geologists making comparisons to. Generally speaking, I would say, Canada is, in a way, as a jurisdiction, kind of similar to WA, but instead of, kind of desertic landscape, we're a little bit more, green and a little bit snowy, and gets white in the winter with the snow.
It's interesting with Fosterville because, of course, it took a while for them to fully understand how big that was. And they also had to drill a lot deeper to get to what I call the sweet spot. And one of the comments you just made was a lot of what you're finding at the moment is about 150 meters. And that's how far have you drilled down? And if Doug Kirwin says, this is like a Fosterville, does Marco sit there saying, let's go really deep to find the sweet spot?
Well, I mean, we have to have a phase approach. I think it will be a bit crazy to put a 3 kilometer long drill
I'm
hole
not
in our
suggesting 3Ks. I'm just suggesting maybe a bit deeper than 300.
Yeah. So yes and no. So let me explain what we've done so far. Just to give you a sense, the resource that we have, the 2.3 million ounces, 90% of the ounces occur within 150 meters from surface, very shallow. And most of our drilling to date has been down to 300 meters.
Okay.
At the Torres deposit, we really haven't passed that zone where there's a sedimentary layer. We believe there's repetition of mineralization below those 300 meters, but we haven't really tested that. Interestingly enough, on that question, this drill campaign, we've drilled our deepest drill hole to date. Interestingly enough, was not at the Torres deposit, was in a new target that we have called New Coast, which is roughly 2 to 2.5 kilometers south of Torres, still within that 15-kilometer trend where we have the 5 past producing mines, and over there we put a 720-meter long drill hole. That we don't have the assays yet, but we actually in September, when we drilled that, we found that so exciting that we just had to publish the core photos and discuss what we're seeing on that drill hole. So yes, we saw what we are typically used to seeing when we drill here, because typically the vast majority, almost the entirety of our drilling or our drill holes will hit gold mineralization. And we're seeing the types of rocks we like and love. We also pierce through a sedimentary layer like the one we believe to have at Torres, which is 2.5 kilometers north. And we got into, again, another stack of what looks like to be mineralized rock on the deeper part of the hole as well, with hydrothermal alteration, quartz veining, pyrites, which is typically what we see in our districts. So we're going to have to wait for the assays.
When are the first assays from that drilling going to start coming in, do you think? Because, people will start to say, okay, well, let's have a look at news flow. Let's see what they're doing and whether it's actually stacking up.
Imminently. It's going to be a week or two. Okay. We'll be releasing drill results until, January, February.
The deposits that you've got, and I just, we're not bringing up any what do you call it? Pictures to show them exactly where it is. But with Cassiar Gold, you've got Cassiar South and Cassiar North. Can you just explain a little bit about those two areas, how far away they are, and what you're doing, how you're managing those, if you like?
Yeah, absolutely. So our land package, as I mentioned in the beginning, is truly massive. 590 square kilometers, 59,000 hectares. That's roughly 25 by 27 kilometers. So we have actually a provincial highway bisecting our property in half. It's Highway 37. North of the highway called the Cassiar North project area, which is prospective mostly for basically open pitable, near surface disseminated gold, with grades similar to the resource that we have at the Taurus deposit, 1 gram to 1.5 grams. And that starts typically at surface. Then south of the highway, we call the Cassiar South project area. And that's, we have a distinct style of mineralization there. So there we don't have disseminated gold occurring consistently and everywhere. Mineralization is very discretely defined in typically 3-meter wide veins, but these veins are running at a much higher grade to what we see in the bulk tonnage disseminated open pitable area in the north. The grades that we see there are 10 to 20 grams per ton. So, for the old timers, that's half an ounce, which is very high grade with a very nice thickness. There's over 300,000 ounces of historical production. So the scenario there is underground mining. The veins are, kind of sub-horizontal, flat-lying. All the past producing veins are open along strike and down dip. We've in the last 5 years, we've allocated roughly 25% of our drilling to extend these past producing veins very successfully. We extend them all with the grades that you would expect, consistent with historical production. And we allocated roughly 75% of our drilling to the bulk tonnage, which is lower grade and hence for some people less exciting or less sexy in a way. But we're typically hitting from surface. Every meter you drill counts because we're typically hitting mineralization, and that allows us to grow ounces much faster. They're, again, using the same term, less sexy ounces, but an ounce is an ounce.
And I was just about to say, an ounce is an ounce. Don't care.
Yeah, exactly. Yeah, and especially in these gold prices, when gold was 1,500, maybe the high grade, can represent a significantly higher margin. With the current gold prices, high grade or low grade, we're talking about, not a substantial difference in terms of the margin because, deposits like this are running with very, very high margins.
You keep finding the gold. It's in sort of an area where it's easy access, etc. You've got a 100% owned mill. I'm always looking at what's the current share structure? What does that look like? How are you going to fund this? And are you going to get into sort of, I guess, early development so that people, because one of the things you said right at the beginning is you've got a market cap of 40 mil Canadian, potentially 10 billion, that's B for billion, ladies and gentlemen, USD in gold. There's a disconnect there. I want to find out about the share structure and funding this going forward and the potential for, I guess, how do we look at this and do early payback, but also get people to say, holy hector, people don't understand what you've got your hands on. So let's start with share structure.
Yeah, so in terms of share structure, we have roughly 140 million shares outstanding. Just under 15% of the share registry is actually owned by insiders. Just under 30% is owned by institutions, specialist mining funds, really from all over the world, from Australia to Hong Kong to Europe, Canada,
Such as
US.
whom?
Sorry?
Such as who?
Broad, Terra Capital, Commodity Discovery Fund, Ixios, US Global.
Okay.
I'm sure I'm forgetting a
That's
few.
enough. That's okay. That's some big names
EMA.
there. Okay.
Norwegian out of New York, Delbrook out of Vancouver.
Okay.
I can keep going.
Yeah. No, that's fine. So 140 million shares on issue, 15% for insiders. And how much cash have you got at the moment?
We have just under $5 million in the bank, cash and deposits.
Okay. All right. So how would you compare yourself to your peers? Because again, what I'm trying to work out here, Marco, why are you not on the radar? Like the instos are coming in, your market cap belies the value of the gold in the ground. Why is there a disconnect?
Well, I think it's lack it's overlooked, underappreciated. Uh, it's like it's been a fast moving the gold price. You know, some stories have a lot more attention, others less so. Some companies focus a lot on marketing, others maybe focus more of the drill doors on drilling. We've allocated, I would say, you know, we compared to our budgets, or compared to our peers, we focus a lot more on the drilling and advancing the
Good,
projects.
good.
And yeah, that can be good, but sometimes can also make investors not so happy because not everyone is paying attention, not everyone is watching, and yeah, I guess looking at peers, you're looking at assets or companies with deposits out there with similar resource size, lower grade with no access or no permits or no infrastructure. And I can think of a few that are trading, even 10 times higher than us, which is actually, you can find many of those in Australia. You will find, companies with 2 or 3 million ounces with this kind of grade, at those valuations.
And ladies and gentlemen, I'm just saying to you, this is not financial advice, but this is what I love finding out for you. When I went to New Orleans Investment Conference just a couple of weeks ago, I'm scratching my head. I'm chatting away to Marco saying, I don't get it. There's a disconnect here. So this is why I love bringing you these sorts of stories, because I want you to do your own research or pick up the phone and you can speak to Marco. But these are the sorts of projects where you say, it's flown under the radar. I'm going to keep a really close eye on this one. And I suggest that you guys do as well. But I guess, Marco, what's the biggest challenge for you right now? Potentially, it's getting the word out that you have got this deposit that is growing pretty damn fast. It's close to surface. You've got everything in place. And I'm really pleased to be bringing this to you. But let's just quickly, before we run out of time, talk about the news going into 2026. What are going to be some of the, I guess, the step changes going into 26? What's planned?
Absolutely. So, just to your question, you're asking, biggest challenge, absolutely, is creating awareness. Let people know what we have. Please have a look. Please do your own research. If you're scratching your head and you looks too good to be true, sometimes it's not. So reach out. I'm happy to jump on a call with anyone and go through any questions you may have. So you won't waste your time by taking a deeper look into this opportunity. Now, to what's planned. I mentioned before, we just completed 7,300 meters of drilling.
Yep.
So we're going to be releasing that, starting imminently and until, January, February of this year. Following that, we're going to be announcing metallurgical studies for the Taurus deposit, as well as the first PEA, first preliminary economic assessment. I think all of these activities will help us, highlight what we have, de-risk the project, and also advance significantly the project. In terms of the longer term vision that we have, we see this project, especially the bulk tonnage area, as a project that can be put into production in 5 years. So following this kind of near-term news flow that we have in the next 6 months, what we want to do is continue to drill, to be able to as we drill and expand, and also infill to upgrade the resource category, we want to, progress through economic studies from PEA to pre-feasibility, eventually to a bankable feasibility study, to eventually get to a mine decision. And our objective is to get this to 5 billion ounces. We're still long ways away from Fosterville. But I'll never forget that comparison, and it's with that in mind that we keep advancing the project, because ultimately Doug Kirwin might be right.
Well, I was just about to say, has does he come back at all? Like he made mention that he likened it to Fosterville. Has he got anything to do with the project at all? Just curious.
Yeah, no, I think he's these days focusing mostly on teaching. He's based in Southeast Asia, so it's. It doesn't go to site visits anymore, but actually just a few weeks ago I got on a Zoom call with him for 30 minutes, discussed about the progress of the project. He's very pleased. He was actually very surprised to see the valuation of the company as well. So I think it's he's still he's still a big supporter. I wish he could could come to site and spend some time and kick rocks there. Maybe we can convince him in the next drill season.
Yeah.
In the meantime, in March I'll be in Toronto, where for PDAC actually, and where I'm looking forward to see his collection, which is very and selfishly donated as well to the Ontario Museum.
Wow, wonderful. All right, well let's wrap it up. Marco, it's been fantastic to have you on the program, but I love to wrap it up and say, you give us 3 reasons why you think people should sit up and take notice of Cassiar Gold right now.
Absolutely. 3 reasons. One is we have a fantastic asset, with already substantial resource that is going to grow and get bigger and more advanced. The second one, which actually we haven't touched, we have a team that has a track record of discovering, permitting, building, operating, selling billion-dollar gold projects in Canada and around the world. And the third one, which is really the most important, is evaluation. It's very hard to find. All projects are unique, but a project can become less attractive or more attractive depending on the valuation. And I think our valuation is really a bargain. So I would invite everyone to reach out, look at us, ask questions, do your due diligence, and also tell it to your friends, please. Thank you.
All right, I'm going to do something I haven't done before, and that is I'm going to flip back and just go, apologies, Marco, just briefly, if you could. You mentioned the second reason people should sit up and take notice is the team, and that they have built billion-dollar companies before. Just touch on that for me, because I've always say this to people, look at the management if they've done it before. So naughty me for not mentioning that before, but I do think if we could just touch on that briefly.
Sure, absolutely. So, I can start with a little bit with the board. I'll be brief.
Yeah.
So on our board, we have a geologist called James Maxwell. He was the exploration director for Sabina. Sabina defined 10 million ounces in the Arctic Circle, and they sold that to B2 for over $1 billion a few years ago. That project actually just went into production a few months ago. We also have a mining engineer on our board, Chris Stewart. He's currently the general manager for the Hemlo mine. Barrick just sold that mine for 1.1 billion last month to a new group. We have Steve Roberts on our board. He's a geologist. He led a team that permitted and developed the Red Chris mine, which is a Newmont mine that sits just 200 kilometers south of us. Newmont acquired that mine roughly, I think, 10 years ago, 70% of it for about $1 billion US.
Wow.
And we have Steve Ledwin as our chairman. He is a former president and CEO of IAM Gold. He was there for 10 years. His big project there was the acquisition and development of the Côté Gold project. Côté is on a ramp up. It's driving IAM Gold to all-time highs. I think that the nameplate capacity for that project is 650,000 ounces per year. So all big projects, just a few people that we have on our board.
Just a few small people that they got on their board that have done it all before, ladies and gentlemen. You can check it all out on their website as well. We will have Marco back in the new year to see how they're planning and going ahead. But for now, thanks so much for joining me today on Making Money Matter.